Hello, everyone! In the dynamic and rapidly evolving world of blockchain infrastructure, few networks have demonstrated the explosive user growth and ecosystem traction that Sei Network is currently witnessing. Positioned as a next-generation Layer 1 optimized for speed, scalability, and real-time applications, Sei is quickly emerging as a leading contender in the competitive altcoin space, with its daily active wallet count surpassing the 600,000 mark and its user base swelling by over 17 million addresses in 2025 alone. Sei is making a strong case for being one of the most utility-driven chains in the crypto ecosystem, even as broader market conditions remain uncertain. This report dives deep into the metrics, momentum, and market outlook that define Sei's ascent amid volatile conditions. Before we start, this is not financial advice. I'm not a financial advisor. All content shared is for educational and informational purposes only. Always do your own research before making any investment decisions. Let's dive in. In a compelling display of growth and network activity, the Sei Network, a high-performance Layer 1 blockchain, has recorded a new all-time high of over 600,000 daily active wallets. This impressive milestone was achieved in the face of challenging market conditions, including a substantial 30% decline in the native SEI token price during the month of May. Yet, despite the bearish market environment, underlying network metrics paint a contrasting narrative of acceleration, ecosystem expansion, and long-term potential. The rapid ascent of Sei Network's user base reflects the blockchain's strategic focus on speed, scalability, and use case specialization. Sei has uniquely positioned itself to serve the next generation of decentralized applications, DApps, particularly in sectors that demand low latency and high throughput processing, such as on-chain gaming, DeFi protocols, and algorithmic trading systems. And the numbers don't lie. Data aggregated from Flipside Crypto indicates that in just the first 5 months of 2025, over 17 million new wallet addresses have been generated on the Sei blockchain, bringing the total number of active addresses to nearly 27 million. This surge in user acquisition has paralleled a sharp uptick in the network's total value locked (TVL). As capital flowed into various DeFi and GameFi applications on the chain, Sei's TVL briefly breached $550 million, an all-time high, before adjusting to a still impressive $471 million at the time of reporting. This growth in TVL is particularly notable in a market climate where many altcoins and their respective ecosystems are experiencing stagnation or capital outflows. A major contributor to Sei Network's exponential wallet growth has been the rise of on-chain gaming applications. According to data from DApp some of the most active and widely adopted DApps on the Sei blockchain are gaming-centric titles, including World of Dipians, Hot Spring, and Archer Hunter. These games have not only amassed loyal communities, but have also played a crucial role in onboarding new users into the Sei ecosystem. Gaming on Sei, a community-driven analytics account on X, formerly Twitter, recently noted, "A lot of Sei games equals a lot of unique address transactions. It's as simple as that." This insight highlights the transactional velocity and organic wallet creation that gaming dApps are catalyzing across the network. What sets Sei apart in this space is its underlying architecture. Unlike general-purpose Layer 1 blockchains, Sei is tailored for performance at scale. It utilizes a unique twin-turbo consensus mechanism and leverages optimistic parallelization, allowing it to process thousands of transactions per second with minimal finality times. These technical advancements are not only ideal for high-frequency use cases like trading or gaming, but also serve to future-proof the network as blockchain applications become increasingly mainstream. Despite these positive ecosystem developments, the price of the SEI token has not mirrored the network's upward momentum. As per a recent analysis by BN Crypto, the SEI token declined by over 30% in May 2025. A sharp correction that has raised concerns among short-term traders and speculative investors. Several macroeconomic and sector-specific factors contributed to this price decline. Foremost among these is the broader trend of capital rotation back into Bitcoin, leading to an increase in Bitcoin dominance, BTC.D. As BTC surged in market share, most altcoins, including fundamentally strong Layer 1s, experienced reduced liquidity and downward price pressure. SEI was no exception to this pattern. However, it's important to recognize that price does not always move in lockstep with utility or network adoption. While price action captures sentiment and speculative behavior, fundamentals reflect long-term value creation. In SEI's case, the divergence between its growing user base and declining token value could present a longer-term opportunity, especially for investors prioritizing network metrics over short-term volatility. While SEI's token performance has lagged behind the growth of its ecosystem, several technical analysts remain cautiously optimistic about a potential trend reversal. Soroush Ossivand, CEO of SSE Exchange, recently highlighted that the SEI-USDT pair has formed a classic inverse head and shoulders pattern on the weekly chart. This particular pattern is widely regarded as a bullish reversal signal in technical analysis, often signaling the end of a downtrend and the beginning of upward momentum. If this formation plays out as expected, it could trigger renewed buying interest, particularly among traders who follow chart patterns and momentum indicators. Coupled with SEI's increasing adoption and robust on-chain activity, this could serve as the catalyst for a medium to long-term recovery in price. Despite its significant achievements, Sei Network operates in a fiercely competitive Layer 1 environment. It shares the battlefield with heavyweights like Solana, Aptos, and Sui, all of which are competing for developer mindshare, institutional interest, and retail engagement. To maintain and expand its position, Sei must continue to attract innovative projects, optimize protocol performance, and expand its infrastructure offerings, particularly in cross-chain compatibility, developer tooling, and liquidity provisioning. Fortunately, the blockchain appears to be taking strategic steps in this direction. Continued partnerships with GameFi studios, ongoing developer grants, and seamless wallet integrations have made Sei more accessible than ever. If this momentum is sustained and matched with stronger tokenomics and incentive realignments, SEI could potentially emerge as one of the more resilient altcoins in the coming cycle. In the ever-evolving landscape of Web3, it's easy to be distracted by token charts and daily volatility. However, it's the underlying adoption, technological resilience, and ecosystem momentum that ultimately determine the sustainability of a blockchain network. Sei Network's rise to over 600,000 daily active wallets, along with nearly 17 million new addresses created in less than half a year, is a strong signal of organic growth. Whether or not this translates into a price rebound in the near term, the foundational pillars are being laid. Developers are building, users are interacting, and capital is flowing, even if quietly. For discerning investors and analysts, these are the metrics that matter most. As Sei Network continues to break records and expand its ecosystem, its long-term value proposition appears increasingly compelling, particularly for those who prioritize network fundamentals over short-term price action. However, it's important to remember that the cryptocurrency market remains highly speculative and volatile. The data and analysis presented here are intended for educational and informational purposes only and should not be construed as financial or investment advice. Always conduct your own research and consult a qualified financial advisor before making any investment decisions. And if you found this analysis insightful, don't forget to like, share, and subscribe for more in-depth crypto coverage. Your support helps us continue bringing you data-backed insights from across the digital asset landscape.